Intel, once a titan of the tech industry, has been facing tough times. The company has struggled to keep up with competitors like AMD and Nvidia in the fast-evolving chip market. This struggle is evident in Intel's declining stock price. Over recent years, Intel's stock has significantly underperformed compared to its rivals, causing concern among investors. The company's woes are multifaceted. Intel has faced manufacturing delays, allowing competitors to gain market share. Additionally, the rise of new technologies, such as ARM-based processors, has challenged Intel's dominance in the PC and server markets. These challenges have put pressure on Intel to adapt and innovate. The company has made changes in leadership and strategy, but the road to recovery is uncertain. Investors are looking for signs that Intel can regain its footing and return to its former glory. Enter Apollo Global Management, a private equity giant known for its strategic investments. Apollo has proposed a $5 billion investment in Intel, providing much-needed capital for the struggling chipmaker. This investment, structured as a preferred equity stake, gives Apollo a say in Intel's operations. Apollo's interest in Intel is intriguing. Private equity firms typically avoid capital-intensive industries like semiconductor manufacturing. Apollo likely sees an opportunity to unlock value in Intel's manufacturing capabilities. The investment could modernize Intel's factories, invest in R&D, or fund acquisitions. This potential deal has sparked debate among analysts. Some see it as a vote of confidence in Intel's potential. Others question if $5 billion is enough to solve Intel's problems. Only time will tell if Apollo can help turn Intel around. This wouldn't be the first time Intel and Apollo have joined forces. In 2016, the two companies formed a joint venture in Ireland. Apollo acquired a 30% stake in Intel's NAND flash memory business. This collaboration shows Apollo's role as a strategic partner. Apollo brought financial expertise and operational experience. They helped streamline the NAND flash business. This partnership could instill confidence in Intel's leadership. However, the current situation differs significantly. Investing in Intel's chip manufacturing operations carries more risk. Section 4. Can Apollo reignite Intel's firepower? The potential impact of Apollo's investment on Intel's competitiveness is a subject of much speculation. On the one hand, the influx of capital could provide Intel with the resources it needs to catch up to rivals like Qualcomm, AMD, and Nvidia. Intel could use the funds to accelerate its manufacturing roadmap, develop more competitive chip designs, and expand into new markets. Moreover, Apollo's expertise in operational efficiency could help Intel improve its manufacturing processes and reduce costs. Intel has struggled with delays and cost overruns in recent years, putting it at a disadvantage to its competitors. Apollo's involvement could bring much-needed discipline and focus to Intel's operations. However, some analysts remain cautious. They argue that Intel's problems run deeper than just a lack of capital. The company needs to address its internal cultural issues and become more agile to compete effectively in the rapidly evolving semiconductor industry. Section 5. Qualcomm's shadow looms. Adding another layer of complexity to the situation is the rumored interest from Qualcomm. The mobile chip giant has reportedly considered making a bid for Intel, potentially rivaling Apollo's investment. Qualcomm's interest highlights the strategic importance of Intel's assets and the intense competition in the semiconductor industry. Qualcomm's potential entry into the fray could create a bidding war for Intel, potentially driving up the price for Apollo. However, it's unclear how serious Qualcomm's interest is and whether it would be willing to acquire all of Intel or just specific parts of its business. The prospect of a Qualcomm-Intel merger raises significant antitrust concerns. Regulators would likely scrutinize such a deal closely, given the combined entity's dominance in the chip market. The outcome of any potential bidding war and its impact on the semiconductor landscape remain uncertain. Section 6. Navigating the uncertain future. The future of Intel hangs in the balance as it navigates potential investments and broader challenges. Apollo's $5 billion investment could provide a lifeline, but it's not guaranteed. Intel needs to regain its competitive edge and deliver value to investors. Qualcomm's interest adds another layer of uncertainty. A bidding war could benefit shareholders but lead to restructuring and job losses. The outcome will have far-reaching implications for the semiconductor industry. Intel's fate rests on its ability to innovate and adapt to market demands.